Perfect, guys. So some radical moves in the market over the last number of days, guys. And I want to start off by really at this stage here taking a look at the dollar index to where we left off last week. Okay, guys. Now, one of the biggest things here, guys, is the dollar is getting strong, but the broader markets are headed to the upside. Now, the correlation between the dollar and the broader markets are broken, and the reason why the correlations are broken at this moment in time is because Mexico decided to sign an agreement with China at this moment in time, and expectations here in the United States and globally is that the U.S. will also sign an agreement. So we're getting a bit of a broken correlation at the moment, but it looks pretty good that the momentum to the upside is actually losing ground. Now, a couple of things to remember also, guys, is that when markets are at a stage living on hopium and predicting the next direction of the markets, usually the direction that it perceives to go in before any agreement happens usually is the wrong direction. Does that make sense, guys? So a little bit tricky this week, especially on the NQ and ES to predict the market moves. Now, if we take a look at the dollar index at this moment in time, and we still step back out into the weekly and into the daily. I'm going to start off with the daily here at this moment in time. Where we finished off the last day was very, very simple. Is we had a beautiful continuation pattern in this essence right here. Does everybody remember this continuation, the rally-based rally? Now, in this continuation pattern, we were seeing the drop to the base to the drop in here, which we were talking about the flip area. Now, what is it perceived to happen after this is the price, in this case here, has closed below this rally-based rally as it broke to the upside. Now, what this in essence has done for us at this moment in time has created a beautiful continuation pattern, the drop into the base into the drop. Does everybody see that? Now, by looking at this moment in time, guys, if we continue looking down to the downside for another high probability zone, we're truly not getting anything at this moment in time until we get into the 91.86 handle. Does everybody see that? So we're seeing at the 91.68 or 86 handle that we still could get a flush on the US dollar to the downside because we took out this demand, which created the supply behind it. Now, having this as a guidance at this moment in time shows us that we still have a lot of room to the downside for the dollar to drop. Does that make sense, guys? Now, taking a look at the higher time frame, in this essence in the weekly time frame, if we take a look at the weekly, just to get a bigger, broader 35,000 foot view, we have this rally-based rally in this essence right in around the 92.67 handle here, guys. Looking up and to the left here, guys, we're still handling this level, the continuation pattern, right here at the 97.04 area. So we were looking at the broader markets and the dollar with the spinning top here in this essence, and we see prices starting to fall to the downside. Having these two components in play at the moment really and truly gives us still a lot of opportunity. How many of you been trading the correlations between the gold market, the commodity-based markets at this moment in time? Let me see in the chat box. How many of you have been trading gold, Australian dollar, euro, British pound at this moment in time because of the weakness of the US dollar? How many of you? Okay. Now, in this essence, if we start looking at just the bigger picture just for the moment, okay, what I want to do here at this moment in time is take a look at, we'll say, the Euro USD, and I'm going to use the spot Forex market at this moment in time. Now, if I take a look at the weekly time frame in this essence, now I'm not using the anchor and control method when doing this, guys. I just want to take a look at the weekly levels of supply, just the fresh areas of supply and demand at this moment in time. And as we can see here, we have our supply level coming in at the 1937, and still our demand is sitting at the 1217 handle in this moment in time. Now, what we want to do consistently is, relative is just to keep an eye on two time frames at any given time. As you can see here on the daily time frame at this moment in time, we have a rally to the base to the rally. The reason why this rally to the base to the rally is extremely powerful at this moment in time is because of the flip area here. Does everybody see that? This is the rally to the base to the drop. In this case here, we got the rally to the base to the rally. So it is flipped from willing sellers in control to willing buyers in control. So this area is a very, very high powerful area for when price retraces back into it. Looking to the upside to see where the euro could get on the daily time frame, this is a beautiful drop-based drop that still is held perfectly at the 1949 handle. Looking at the comparisons of both of these, not using the curve technique, guys, but just looking at supply and demand just in general to get a gist, have we still a lot of opportunity to move into the 1949 handle or the 1934 handle based on the US dollar? Have we, guys? Have we still a nice movement into the 1934 handle? Okay, so we have still a lot of good quality opportunity to the upside in this case. Now to reiterate, if we go back into the US dollar, the dollar sign DXY, we need to comparisonally look at where the US dollar is going. So in this case here, where is the US dollar going, guys? Let's make this as interactive as possible. Where's the US dollar headed? It's headed to the downside. So where should we have the Euro USD headed, guys? Where should now the Euro USD be headed? To the upside. Perfect. Now here's the key, guys. We're looking at the dollar index to give us a broader opportunity in other non-correlated markets, inverse correlation, I mean. In this case here, once we see that the US dollar has the room to move, then we know which items we should tackle on to actually to be able to trade. Taking a look at this Dixie at the minute, I want to reiterate at this moment in time, do I have a lot of junk sitting here on the weekly and also on the daily time frame? Do we have a lot of junk? And what I mean by junk is sideways movement with not a lot of high probability demand, yes? Now the question is, and we're going to use the common sense approach here, will price just easily slice through these areas, or could we anticipate a little bit of a bounce up in price before price continues to the downside? What do you think? A little bounce, right, before price heads to the downside. So in this essence, we're looking, chewing through it, absolutely. So what we're truly looking for at this point, and this is the beautiful daily chart that it shows us here, if price bounces back up into that 95.08 handle on the dollar index, where do you believe the dollar then will move to, guys, in your opinion? So price rallies back into the 95.08 handle on the daily time frame. Do you then think there'll be a thrust of downward momentum from that supply level? Yes, Felicia, down into that 92.67 handle at minimum, right? So having that piece of information, it gives us a little bit of a waiting period when we look at the Euro USD. So by jumping across now onto the Euro USD in this essence and in this case, we can see that there is easy price movement on a weekly time frame from where current price is all the way up into that 1934 handle. Have we the inverse problem in this case here? Have we to get through this uglyish looking sideways type movement on the side, on the sell side at this moment in time on the Euro USD? We have to chew through all of this sideways price action. Now, there's a couple of things to note in this piece of information. The pieces of information that we're looking to obtain is how will price on the Euro USD revert back down into the 115.97? It has to have some problems ahead. And because we have this sideways movement at this moment in time, we're anticipating price to bounce back off this not so good quality area and back into the 1597 handle. Does everybody see that, guys? Okay, so once price gets back into that 1597 handle, what could we do as traders, guys? Because the euro, or because the US dollar is getting extremely weak, what could we do as traders? Take longs. Short, says Nancy. No, Nancy, definitely not shorts, because we're here. We're not looking to sell short this corrective move. We're only looking to the higher probability move, which would be buy, because price is moving to the upside. Now, in this essence, a lot of people out there will be selling short in these negative type areas, which are not high probability. Price has moved too much sideways in this case here, so there should not be unfilled sell orders in these areas. That is the key here, guys. Does that make sense to you on both of these? Are we good with this? So anticipating that the US dollar, in this case here, will go back into our supply level at the 95.08 handle, will actually create a corrective move to the downside, the demand on the Euro USD, so that we can start engaging again into the long side. Does that make sense to you guys? Okay. How many of you here have been looking at the Euro USD and looking to get long? Okay, so be careful in this case here in the Euro USD, because we're looking and anticipating, right, for price to move back into the 1597 handle. Do we truly want to be taking little areas before that 15 or 116 handle, guys? Do we really want to be taking quality or zones before that to get long? Absolutely not. So we're in a waiting period at the minute. So just look at this 2 days up. If we can get a corrective move back down in 1 to 2 days time, that could be a perfect opportunity, a perfect buying opportunity within the Euro USD. Now, if we look at other correlations, like of gold at this minute in time, and we jump back out into the ATGC picture at this moment in time. And then, okay, so hopefully it doesn't base on the way down. Absolutely, right? But we'll start to see that as price unfolds. Now, taking a look at the futures contract of gold, our first qualifiable supply level on the weekly time frame is coming in at the 1304 area. We're just after coming off this drop to the base, to the rally, to the base, to the rally, and just sitting here. So in this essence, and in this case, we have a lot of price movement to the upside in the futures contract of gold. Does everybody see that? And as you can see here on the hard right-hand side of this downward movement here, there is no quality supply level on a weekly time frame until we get back to that 1304 handle. Does that make sense, guys? So what I want to do here at this moment in time is take a look at the daily time frame. So my whole purpose of this session is to go through the non-correlated or inverse correlated pairs and show you the direction into next week. Now, at this critical time, if we take a look at here and to the hard right here, is this a hot mess in this case here, guys, on the supply side? Is that a hot mess? Absolutely. Could we find anything here to sell short? No, definitely not, right? Even if I drop into a lower time frame, I guarantee you I will find something beautiful that I could force myself to sell short. But remember, the higher time frames always rank. The first qualifiable supply, right, that's authentic and fresh, will come in here at the 1249 handle on a weekly time or on a daily time frame. So putting these charts together at this moment in time, can we clearly see, sorry, I forgot to do the demand side of it. If I come down here onto the left-hand side, this is not a good continuation pattern. So what I'm going to do is go back to the left-hand side, in this case here, still no quality right here. Keeping going to the left-hand side here, we can see a beautiful continuation pattern right here, which is also a flip area. Now, in this essence, where's price been attracted to, guys? Is it been attracted to the upside, or has it been attracted to the downside? Which is it? Where's the train headed to, guys? Up, right? Tammy is saying down. Watch this, Tammy. See this here? This was a past train to the downside. The new train has started to the upside. Price has been attracted to the upside. Even if we go back and look to the left-hand side here for another qualifiable zone, in this case here, what we see at this moment in time here is the drop-based drop with a little retest, okay? In this case here, once we deal with the 1249 handle, if we get through it, price will then be magically attracted up to that 1340 handle, where in this essence and time, it will be a good long position long term also. Putting this information together, in this case here, I come along here at this moment in time, and what I see here is a picture perfect momentum move to the upside, both on the weekly time frame and on the daily time frame. Does everybody see that? Which way is price magnetically been attracted to? And where's the path of least resistance? Is to the upside. And again, we took our lead again from the US dollar in this case here, guys. So in this case here, if I go to the $ DXY, we can definitely see that price is headed to the 92 area, both on the weekly and daily time frame. Does that make sense to you? So in this essence, do we not need more time in the weekly chart? No, that's perfect, right? Looking at both of these, what we're doing here is looking at the inverse correlations against the US dollar. So when I have this piece of information, all I'm interested in is where could price easily get to? And when I take a look at this price action chart, on the daily time frame and the futures contract of that GC, we're looking at the 1249 handle. Does that make sense to you guys? Now, here's the catch. What are we doing here at this moment in time on the actual daily time frame? I want to explain these patterns clearly, guys. Are we starting to base here, right here on this price action chart? Are we, guys? So having this base here at this moment in time, if I look to the left-hand side, have I got a sideways move? Have I got the sideways move here with a basing pattern just underneath it? Now, because the weekly and the cleanest profit is to the upside, what are we anticipating for price to do here? We're anticipating for price to do what? Close above here in this essence and give us a movement out of this area. Does that make sense to you guys? The minute we see this movement on this price action chart, have we put in a brand new demand zone that we could take a trade from in around the 1216 back up into the 1250 handle in this case here? Could we do that, guys? Yes, big time. Now my question to you at the moment in time is, because the US dollar is retracing at this moment in time, what I'm looking for, we're tracing back into its supply area, I'm actually looking for a corrective move to the downside in gold, so I'm not anticipating price to first blow through this area. What I would suggest is, in this case here, looking at this lower area on the daily, so that you would look at, in this case here, a demand area in around the 1203 to 1190 area. So nice pullback into this area of demand while the dollar is pulling back into the supply level. Does that make sense? So in this case here, yes, right? So basically, Randy, what I'm looking at, and I'll double back on it here, is the $ DXY. So if I have the $ DXY, I'm looking for price to come back into the 9508 handle, and at the same time, for perfect inverse correlation, I'm expecting the futures contract of gold to come back into the 1203 to 1190 area. In around that area on a 4 hours, 2 hours, 60-minute time frame, you're going to find a high probability area internal of that you can actually get long. Does that make sense, guys? Yes, dollar up, gold down, absolutely. Perfect. Now, if I take it to another step here at this moment in time, what I'm going to do here is at this moment in time is I'm going to jump out into at SI. SI is a silver futures contract, right, for silver. And the reason why I'm bringing this up is I've been hearing this week here at the center is a lot of students are looking to get involved in the silver contract. And the reason why they're looking to get involved in the silver contract is because it's commodity based. Now, one of the biggest things to remember in trading silver is China at the moment in time, because of what's going on with the U.S., wanted to incorporate or wanted to buy a lot of silver because they were going to put it into the manufacturing of roads for strength and structure. Because of what has gone on, there's less and less probability of this actually working in that desired favor at this moment in time. Does that make sense, guys? So if we go back to the left-hand side, in this case here, guys, and we shoot to the left, we continue to the left-hand side, we're starting to see pockets of what here? True demand zones in this case here. Does that make sense? So down around the 1300 handle, right, we could see a big movement to the downside. Does that make sense, guys? So at the 1341 handle, we're looking for price to get into the 1341 to the 1255 handle. Does that make sense, guys? So having that here at this moment in time, we still have a lot more room for the silver to get down into demand. So my anticipation is at the moment, or my recommendation, or not even recommendation, will be to stay away from silver until we see what happens between China and America. Does that make sense, guys? Try not to trade silver, because what ends up happening is we don't have that inverse correlation. We have no backing, no probability of what's about to happen. So this will become a huge, huge problem if we're trading silver just based off one particular piece of information, and that's the silver charts. Is that crystal clear for you guys? Perfect. Now what I want to do here at this moment in time is I want to come along and I want to take now the pound US dollar. Anybody know why I'm taking the pound US dollar, guys? The British pound. Why would I be taking the British pound, guys? So it's inverse. I'm from that area. Close, Ireland I'm from. So if I take a look at this inverse correlation piece at this moment in time, guys, when I look up into the charts, we have Brexit that's going on at this moment in time. So basically what's ended up happening in the European, between the European and Britain at this moment in time, they're not seeing eye to eye on anything they're actually trying to achieve, which is giving the British pound maybe a bit of a more of a negative in this case here. So if I come along and I know that the British or the US dollar is getting strong, this should have a lot more momentum to the upside. As you can see here at this moment in time, we have no momentum in the British pound US dollar. Does that make sense, guys? Even though that we have this rally to the base to the rally, which is actually sitting here at this moment in time, price still can easily get down into that 125.49 handle. As we said, we want to be buying commodity based. We want to be buying the Euro USD. My focus is to tell you on silver and on the British pound that they're fundamentally and technically broken at the minute, and that they can be very, very dangerous trading items. Does that make sense, guys? So even though that you are looking at these at this moment in time to take opportunity, you need to be extremely, extremely cautious, right, when trading these vehicles, because you don't have high probability in the here and now. Does that make sense, guys? Are we good with this? So on the next one, what we're going to do here at this moment in time is I'm going to step across now and I'm going to take a look at the USD CAD, the US dollar versus the Canadian dollar. Now again, taking this chart, we're going to take the raw data at this moment in time, and we're going to look at futures contracts of oil as well. If I take a look at this, and I want you to focus up here where my cursor is, the US dollar and the Canadian dollar are inverse. Does that make sense? Just bear with me 1 second, guys. Sorry about that, guys. So in this case here, if you look where my cursor is at this moment in time, I have the US dollar versus the Canadian dollar. Now the US dollar comes first, so if price rallies, that means that the US dollar is getting extremely strong and that the Canadian dollar is getting weak. When price drops, that means the US dollar is getting weak and the Canadian dollar is getting strong, okay? Because the Canadian dollar is at the back. Now in this case here, let's have a look at what this chart is telling us at this moment in time based off our supply and demand formations. This is a beautiful drop to the base to the drop with a slight retest on it. And if I take a look at the downside here, this beautiful rally-based rally, we have price already fluctuating to the downside here in the Canadian dollar. Does everybody see what I'm doing? Okay. Now taking a look at the next time frame, which is the daily time frame. I look here and this is just a real hot mess. Do you see this, guys? On the left hand side. I keep moving to the downside and I'm not seeing any quality information. The one level that really interests me is just here. This drop base rally, the double formation that we love consistently, the pivot plus the continuation. In this case here, I have the rally base, drop base rally, which means I have supply become demand and I have a nice little retest also. So having this piece of information and this big movement to the upside, we don't have anything stopping price free falling into the 125.58 handle at this moment in time, which is perfect, which shows us that the US dollar still has to get weak. So it's given us the same story. In this essence, we have a beautiful little area just here, a drop-based drop, right, with a flip area also. So this is extremely high, we would say, on the curve here. So price is a nice little movement from around the 29.30 handle all the way down into the 25 handle. So that's nice clean profit. Does that make sense, guys? So we can look to, as price retraces back into these higher time frame areas, we can look to engage in selling short. Does that make sense? Okay. So in this case here, we take a look at it to the downside. We're heading to the downside. Now, putting these together, these parts together in this case here, guys, we're looking at the weekly time frame and we're also looking at the daily time frame in this essence. Have we got a picture perfect trade, guys, to the downside? No, Randy, don't ever take trades as momentum. Always let them pull back into a supply level when selling short. Be patient always, and that's where you get your huge return on your profits. Does that make sense? Now, in this essence, that is the Canadian dollar. The next market I'm going to fluctuate out to is FCL, and then I'll take a look at the AD, Australian dollar, right, futures contract also. So once I come across here at this moment in time, I'm taking a look here at this moment, and I'm not seeing anything quality on the crude oil. Does everybody see that? So crude oil is just fluctuating to the upside at this moment in time on a weekly. So I'm not getting a clear picture to where this is headed. What I am seeing, though, on a daily time frame for crude oil is this drop-based drop at this moment in time. Okay? This is the drop-based drop. Price pulls back in, drops away. Now my question to everybody here in the room is, why am I concerned about crude oil at this moment in time? Can anybody tell me? What would concern you about crude oil at this moment? The Canadian is down, which gives it the inverse correlation to the US dollar. Tell me on this price action chart of crude oil, what would it make you afraid to sell short? So watch this pattern, guys. See this rally-base rally here at this moment in time? So we got a rally-base, rally-base. Everybody see that? Now, in this case here, this drop-base drop is perfect because price got stuck here. Rally-base rally, has it taken the profit away from me at this moment in time? Has it killed any profit potential for me? Yes, there's no profit potential because we're now in a squeeze. We're in a squeeze between willing sellers and willing buyers, so I cannot do anything at this moment in time. Now, my anticipation, right, would be that this demand would not hold and we could get a flush in crude oil, right, to the downside. Does everybody see that? Maybe. Or should we expect price to go through this based on the US dollar? Which is it, guys? The US dollar is what, guys? Is getting weak, yes? Okay? So crude oil should be getting what? Strong, yes? Now my question to you is, once this correlation holds par, we still have to wait for the leg through the supply level before we even think about engaging it long. Does that make sense, guys? Because it's just caught in a bad area at this moment in time that it cannot make up its mind which way it's going. But because of the inverse correlation, this here at this moment in time should take this totally out, okay? So where will price stop when it takes this out, guys? If we go back in the past here, we have a beautiful couple of levels sitting right here in the weekly time frame on top of each other. Does everybody see that? Back to the origin of the first big move to the downside. So that would open up profit for you from the 70.25 right into the 17 or 73.90 areas minimum. Let's take a look at, so this is the daily time frame at this case here. So in this case here, let's take a look at the weekly time frame. So the weekly time frame is chewing away here. Once we chew away, we can look up and to the left to see where price could go to. And price will come back into our anchor area here on crude oil at 78.58 also. So we still have a lot of momentum to the upside and a good level of demand here at the 60.70 area. But again, guys, it needs to be able to clear what, guys? It has to clear that 70.25 area. If it doesn't clear that 70.25 area, what I'm looking to do is just trade the USD Canadian at this moment in time because there's no quality on any of these charts of demand levels. So we're in free fall area. Does that make sense to you guys? So those that don't trade, you could do this in the futures contract of the Canadian dollar, or you can use the USD Canadian in the futures market, either or either. Crude oil is not giving you a clear path of least resistance at this moment in time. So what that would end up doing to your trading, would you be getting stopped out a lot on the crude oil because the path of least resistance has not been created just yet. We're always looking, guys, for the highest probability directional plays using inverse correlations with the US dollar in this case here. Does that make sense to you guys? Okay. So let's move on to the next market, which is going to be the AT/AD, guys. So if I move into the AT/AD, in this case here, I'm looking here at this moment in time. So dollar's getting weak, yes. Okay. We're starting to see a movement to the upside here in the Australian dollar. Too much sideways move. There's nothing really stopping in this essence here. Price getting back up into, well, maybe there is a little bit here, but not of quality. But you can see there's really nothing to stop a price from getting from the 73.36 handle right back up into the 76.73. Is there, guys? Is there anything stopping price, guys? There's no supply levels. But one of the things that you notice here, we're stuck here in the bottom of the 25% curve area, and plus we have pockets of demand also. Now it will make it a lot clearer once I jump across here onto the daily time frame. If I took a look at the daily time frame, is there any quality here, guys? And there's no quality here until I get back up into this area of a drop base drop in around the 75.64 handle. Looking down to the left here again, just looking for supplies and demands to show you the path of least resistance. You have what we have here is the rally, drop base rally, base rally in this essence and key. Are we good with this, guys? Now, in this case here, the path of least resistance is to the upside. Does that make sense? Now, what I want you to notice here at this moment in time, what are we forming here at this moment? We're forming that base again, guys, yes? So if we can get a movement out of this base to the upside, would we have got our leg out in this essence? Yes. So can I physically trade the Australian dollar as a swing bias or swing purpose at this moment in time? No, I can't do that, guys, right? Because why? I don't have the proper formation to lean on at this moment in time. So the Australian dollar will be taken out of my vocabulary until I get a leg out on that daily time frame. After that, then price will be able to manipulate its way back up into that 75.64 handle. Does that make sense, guys? Are we good with this? Now, just to recap, guys, okay, just to make sure you have $ DXY. Where am I anticipating the dollar sign to head to, guys? Where's the US dollar headed to? At this moment in time, the 92 handle, right? This is the overall direction. We're anticipating price to get back into the 75.08 handle. If this doesn't hold and breaks the 75.73 handle, what does that mean for the inverse correlations, guys? Have we changed direction? So you need to have the two thought processes. What is the chart suggesting and the dollar index suggesting in the here and now? And then you have to have that but-if statement. My whole intention is if price gets in here, price should leave the supply level and head to the 92 area. But if it takes out the 95.73 handle, we're going way higher, probably up into the 98 handle. Does that make sense? So you need to have two thoughts or two types of hats. The hat for the now and the hat for the but if. At the minute, we're still selling short the US dollar, but if it breaks the 75.73 handle, we take off the hat and we put on the buyer's hat. So dollar headed down, CD headed down, no USD, US dollar Canadian, not the futures contract, Valerie. AD headed up, yes, right? So in this case here, dollar down, Canadian dollar is getting strong, Australian dollars is getting strong, right? Shouldn't they both be inverse? Yes, to the dollar. So the dollar is headed down, right? And the inverse correlation means Australian dollar and Canadian dollar will be getting strong. In the spot Forex market, the US dollar and the Canadian dollar would mean that the US dollar and Canadian dollar, if you take a look at this chart here at this moment in time, we need for price to drop here for the Canadian dollar to get strong. So this is correlated in the direction of where the US dollar is headed. That's the difference, okay? So this can be a little bit confusing when you take a look at the US spot Forex market, okay? But in the futures market, it will be headed up the way. The direction will be up. So again, guys, two hats. We're still selling short, but if the 95.73 handle doesn't hold, we're going to switch from selling shorts to buying long, guys, okay? Now I want to take a look at the ATES, guys. So the futures contract of the ES. Are we good with this? Here we go, guys. Are we ready? What is happening here at this moment in time on a price action chart today? What's happening, guys? We got the rally and we got the base, yes? This is in a real bull market at this moment in time, isn't it? Now, I'm going to use a little bit of old technicals here, okay? This was the last impulse move to the upside, yes? From here, yes? If we look at the last impulse move here, and if we take the last impulse move here, everybody see this? So I'm going to look at the biggest impulse move, which will be this one here, and I'm just going to measure it from where it went to. Now, price could easily, right, at this moment in time, hit that 2950 area, guys, at this moment, okay? And the only reason why it could hit that area is because of sentiment based on an agreement between the United States and China. We don't have the correlation between the US dollar, so we have to be extremely careful. Does that make sense with you? Headed to 3,000? Could be. We don't know just yet, but remember, this market is on hopium. If I take a look at the monthly time frame, right, notice what the monthly time frame is doing at this minute. It's just edging higher, right? So in this case here, we have to be very, very careful on where these markets are headed. Personally, if I'm going to swing trade this, I'm not buying the S&P 500 at any of these price points. I might intraday trade it for a momentum play by buying or selling within demand, but there is no way that I'm actually going to be a willing buyer at these prices because this is way overpriced. Does that make sense, guys? Making sense, guys? Yes. The same problem lies at this moment in time on the @NQ, okay? If I take the @NQ at this moment, okay, and I look at the last number of surges, okay, this was a surge here, this was a surge here. Does everybody see that? Now, taking the longer one, we could actually get to the 7,800, okay, on this up as far as the 7,800. That could be the impulse move at this case here. So they're decoupled, guys. Just be careful when trading the @NQ or ES at this moment in time until we start to see patterns of supply or demand. Does that make sense? Form, okay? But I would be staying away as a swing trader at this moment in time. If I take the @YM, okay, @YM, again, where are we with the YM, guys? Where are we with the YM? We're stuck in a rally-based, drop-based, drop area, aren't we, guys? So if you want to trade a market short based on structure, these will be the best areas on the YM at this moment in time. Again, what I'm not liking to a degree is this indecision candle. So if I open up this chart here at this moment in time, I have a huge indecision candle, which concerns me a little bit. So my advice at this moment in time, guys, if you're going to trade long or short in these marketplaces, you need to be extremely careful in the broader markets until we see how Trump and China deal with the issue that's at hand. Does that make sense, guys? With me so far? Okay. So the red light or the amber light is up, guys, to be extremely careful in this case here. Yes, watch today if we drop this down into a 10-minute time frame. And if we had this in a 10-minute time frame, you can see that price whipsawed all day long, right, up and down. Does everybody see this? Which means it was pretty difficult if you don't know how to play the Globex traps, which we'll be covering in about 2 weeks' time, because this was a sideways and choppy movement. So be careful, guys. We're doing momentum runs to the upside. If you're trying to run after the train has left the building or the station, you're going to get caught trying to run with this momentum to the upside. What's in our favor in a big way in the YM is this rally base drop. It's one of the real lagging indexes at this moment in time. So when we take a look at the ATNQ, okay, if tomorrow we start to see weakness on the ATNQ, are you going to sell short on the ATNQ or on the ATES, guys? Which is it? You going to sell short on any of these two? YM. Jim and Danny, why would you go short the YM? Gonna wait for this response, guys. It's in supply, absolutely. We don't have higher time frame supply on the ES or NQ, but we do have higher time frame supply on the YM. Does everybody see that? So this will be the better indice to be trading at this moment in time for your success, guys, not markets that are at all-time highs. So we will get a correction in the broader markets, but we want to see weakness across the board first. Does that make sense to you guys? With me so far? Perfect. Now, one of the things that I just want to touch on here at this moment in time is just to reiterate. Dollar index, I really want to get this across, guys, because this is one of the most important things. And I want to see the chat box light up so that I know that this information, that you're starting to get this information. We're expecting the US dollar to get back to the 95.08 handle. True or false, guys? True. Perfect. Right? What does that mean? When price gets back to the 95.08 handle, should we be going short the gold futures contract? Long GC because of the inverse, guys, right? Should we be going along the futures contract of crude oil at this moment in time? No, wait. Perfect, guys. Wait, guys, because if we take a look at the ATCL, we talked about the squeeze. Do you see the squeeze that's going on here at this moment in time? So we don't have any profit to the upside and we don't have any profit to the downside. Does everybody see that? So after we get that movement away, the USD Canadian, will I go long the US dollar Canadian or will I go short the US dollar Canadian? Long or short, guys? Short dollar, buy Canadian dollars. So we'll be hitting the sell short button on this case here, yes? Beautiful. Okay. If I come back to the SI, in this case here, silver, are we going long or short silver? Neither. Because of what? These talks at this moment in time. This is totally decoupled from an inverse correlation standpoint on the US dollar. Are we good with that, guys? Good so far? Yes, perfect. Now, my next one then, guys, is if we go to AUD, US dollar at this moment in time, right, what am I looking to do? Do I go long or short the or Aussie dollar? Sorry, it was on at AD, in this case here. Long AD, guys, once we get the leg out. So we're in waiting mode on a lot of stuff at the moment in time. Does that make sense? So we need that movement away before we can do anything at this case. Does that make sense to everybody? Perfect. So we're good with that. Now, one of the things that I want to bring up right now before we finish off is the futures contract of the Japanese yen. Now, this here, guys, what I want to build out is to show you how the sentiment in the market at this moment in time, people are not really concerned at this moment. We can see price rallied up, now it's dropping down on a weekly time frame. The problem when we scrunch this weekly time frame, we have a major area sitting in here at this moment in time at the 86.39 handle. Does everybody see that? With no good quality supply to the upside. So when I jump across here and I take the ATJY, what do you see at this moment in time? What do you see on the daily time frame of the Japanese yen? Basing sideways, yes. Have we got the drop in this case here to the base? Have we got this here, guys? Yes. So nobody at this moment in time, truthfully, are really flocking to the Japanese yen. And the Japanese yen works on worry, fear. So in this essence, if we take a look at here, the stock market is going to the upside. People's perceived perceptions is that what, guys? That the dollar, or that the stock market is going to the moon. That's the sentiment at this moment in time. So when I take a look at this area right here, I'm going to capture a big area so you can use this over the coming days. Could I, in this essence, take a look at this to take a sell short position to the downside? Based on, we're talking sentiment, we're talking people's perceived perceptions. It's their reality, yes. Their reality is stating that the marketplace is going up and everybody is getting good, fat, and happy, yes, on the 401ks and IRAs and Roths. But as you can see, that then dies down on the Japanese yen, and all that happens is price will come back into that 85, 86 handle, which banks and institutions will then start accumulating again to price to the upside. Does that make sense, guys? So in this case here, could be a great opportunity once we get a leg out again on the Japanese yen to take a sell short position on a price action chart. Are we good with this, guys? Now remember my view, bigger time, my view is a 12-month view when I do my big 35,000 foot view. This is more swing or intraday that you can capture price movements. Does that make sense to you guys? It will pull back. Remember, Felicia, price always retraces back to a supply level to give you your entry at the very beginning, right? So in this case here, just be aware at this moment in time that this is going to be a beautiful play. Just people are just living on hopium, Felicia, right? And Valerie. So it's like they're living in hopium. The market is going down, so the Japanese yen is just falling because people are not buying it at the moment because the returns are huge. So in that case here, when we get back down to demand is where we start seeing more corrective moves on the broader markets, and everybody will pile in again into the Japanese yen. Does that make sense? Okay. So Friday's a ha-ha moment, yes? Just look at, guys, it's very simple, guys, is when you're looking for items or ticker symbols that people will go to, just look at the likes of Safe Haven, which is at JY. Right, that's where big money flocks to. Another big one that money flocks to is at SF, which is a Swiss franc, guys. So if I bring up the Swiss franc, what's happening here at this moment in time with the Swiss franc? Swiss franc is headed which way? Right? So Swiss franc is headed up here because it's consistently tracking the ATY, guys. Right? ATY is coming down here. Right? If we look at the ATUS, right, 30-year, okay, coming back into demand because it has to take out these areas. So if you remember the past recordings that we had, looking here at the ATES, we had too much problems on the supply side on the 144.24 handle, so that we couldn't get through it. The same thing on the ATY. If we take a look at the ATY, we did not have any problems, at least until we got back up into the 121.29 handle. Does everybody see that? So if we can get a good pullback into this area just here, right, on the TY, we have a beautiful path of least resistance back up to that 121, which is why you're starting to see the Swiss franc already starting to get bullish and put in a beautiful rally-based rally. The other reason to why the Swiss franc is getting bullish is because of the @GC. Everybody see this? Why do you think, in this case here, people will be looking to the Swiss franc also for safe haven plays? Why do you think so, guys? It used to be backed by gold, guys, and it's also what? A safe haven country. So using them types of correlations, guys, you can create a lot of opportunities in the marketplace. Does that make sense, guys? Now, the recording will be available tomorrow, guys. One of the biggest things, though, I want you to do is go back over this recording 5, 6, 7, 8, 9 times, because I put a lot of correlation pieces in very, very quickly in this case here. And when you start watching these correlations in the marketplace and just keep repeating it each day, guys, it's amazing to how the charts start to sing. Does that make sense? No, I wouldn't go into the cross pairs at this moment in time, guys. Stay away from that. Can we use Sam's Grids levels? Yes, you can use Sam's Grids levels. Make sure you get the direction of the market right, and then wrap Sam Seiden's levels around it, Jim or Danny. Okay? Make sure the direction is right and use the opposing zone on the grid then to take profits. That is the key, guys. All right, guys, I have to jump off here, but have an amazing week, guys. I fly home tonight to West Coast of Ireland, so our next session will be done from my kitchen table because it's going to be 10 o'clock at night or 10:30. So looking forward to then, guys. We will. I will start next week by bringing in the controls and anchors and these correlations more into play as we go forward, guys. God bless and see you all. Perfect, guys. So some radical moves in the market over the last number of days, guys. And I want to start off by really at this stage here taking a look at the dollar index to where we left off last week. Okay, guys? Now, one of the biggest things here, guys, is the dollar is getting strong, but